Okay, elite seven-figure traders are great at taking the highly complex and simplifying that down to systems and structures that allow them to do the right thing quickly and without much thought. In this video, we reveal a 5-minute day trading plan that does just that. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City since 2005 and proud to develop numerous 7 and even 8-figure per year traders. Watch, take notes, and learn from a professional proprietary trader on our desk so you can grow your trading account.
Today in 5 minutes, maybe it'll be a little bit longer than 5 minutes, but basically in 5 minutes, we're going to try and come up with a plan. Most traders that I know use at least these 3 things. So the first thing is you need to have a small list of stocks to trade. You should have a list of stocks, really small. You trade them every day so that you actually get a feel for them. Every experienced trader supposedly has these small lists of stocks that they really have a feel for, right? Second one would be you want to make sure that you're trading the open and the close, because that's where most of the volume is traded on the day, right? The open is where you'll see all the volume and the price movement, and the close is where you'll see all the volume and the price movement, power hour, right? The third thing is you always need to work on your trading psychology every day. You're the only thing that's really holding yourself back in your trading. Well, actually, don't focus on any of that. I know everybody's heard those pieces of advice, but I actually don't know any experienced trader that's actually making money that focuses on those 3 things. I don't see anybody walking around focused on those 3 things. When I look around at the traders that I interact with, the traders that I know are making money consistently, the traders that are really putting up big days, what I see is they're letting the trades find them. So they're not coming in with a list of stocks that they're going to trade every day no matter what. They're actually using dynamic scanners to kind of find where the trades are going to be offered to them each day, and then thinking about where they have an edge. So they're going to use a volume scanner, a news scanner, price alerts, even technical analysis scanners. All those work. But on their own, they tend to struggle to be a little bit dynamic. And what we found is that you need to focus on stocks in play. Then you need to layer on the setup and then actually find the trades, those specific trades that have that high probability in the setup. So what we're looking for is, maybe we're using a price alert, but we're using that combination of the setup and then the trade itself. And we're not coming in every day and saying, I need to trade Tesla because Tesla moves every day, or I need to trade NVIDIA because NVIDIA moves every day. I have a really good feel for this stock. If you're doing that, what you're doing is you're saying, I know how all the other participants in this stock are going to act all the time. Well, what if there's fresh news in that stock? What if it breaks out of a range? What if something fundamentally shifts in the market and other participants are involved in that stock? Well, then you no longer have a feel for the way that stock trades. In fact, you're going to have a feel for the way it used to trade, but you're not going to have a feel for the way it's trading today. But if you're focused on stocks that are moving, that are showing range, that other participants are always involved in, then you're going to be able to dynamically move to where those participants are moving. You're going to be able to trade and play a really winnable game in different sorts of stocks that have higher EV, that expected value of your trade working. They're going to have better follow through. They're going to have much better risk reward. It's just a much better way to trade. So everything we do when we're building alerts to let trades find us, we do very dynamically with our technology. So we do this with the Scalp Radar, and more about the Scalp Radar later, but with the Scalp Radar and with any of our technology, our list actually changes each and every day because we expect the participants that are involved in these different stocks are the ones that are going to provide us those trading opportunities. And those trading opportunities are dynamic. They're not static across the same names every single day. We expect those other participants, those big players, to move where they have to move each day. So we should expect to move where we have to move every day. So you're going to start your prep for each day with those in-play names. And ideally, you're going to take those names, that dynamic list, and you're going to get it down to 2 in-play names. If you're looking at more than 2, we've just found it's really tough to focus on that. And if you struggle focusing on 2, you can even go down to 1. But anything more than 2 tends to be a lot, unless there's one general idea you're executing. But that's sort of a specific example. We can talk about that later. Ideally, 2 in-play names to focus on through the open. And then we'll even share a couple trades that you can actually look for. But that takes us into our second point, which is on the open, there's a lot of volatility, but usually in that volatility is the least amount of clarity. For the people that say, I only trade the open and I only trade the close, that's great, but you're trading at the points that are typically the least clear. It's like the intro of a really good book, right? If you just read the opening, the first chapter of a book, and you read the last chapter of the book, would you understand what happened in that book? Well, likely. That intro sets the stage for the book. It sets the tone. It sort of develops the expectation of what you can think about happening in that book. But if you're to stop reading after that intro, then jump to the end, you're going to know what happened, but you're actually going to miss most of the real story. And there's so much edge in that story. So here's an example that you're seeing from this week, and we'll actually share the Spencer Scalp cheat sheet. It's very specific cheat sheet. And this is a really good trade that you can make in the morning and in the midday. So we're avoiding the open and we're avoiding the close with this trade, this scalp specifically. So if you don't have filters or alerts or technology that helps you identify the trading opportunities after the open, it means you're more likely just sticking to a narrative that you read the opening for and maybe you read the close for, but you're not adjusting to what's happening. You're less likely to see those things just fall into your lap, see them develop for you intraday. And as a result, what we've seen is you're probably not going to be adding to your P&L very effectively through the day. You're more likely to get these big P&L spikes through the day and then whittle away at it, grind down. And then maybe at the end of the day, if you don't get that big P&L spike to take you back up to your P&L high on the day, you're actually even more frustrated. And then even worse, carrying that frustration into the next day. It sort of is a pattern that can create this awful loop where you're doing something well, but then everything else is taking away from it. And then you have to do something well again to keep yourself going in that right direction. If you're using the opportunities like what you see in the Spencer Scalp here, and again, that cheat sheet's available at the end, you can take advantage of the opportunities through the day. So you can trade the open, you can trade the morning and the midday with very specific setups, and ideally with some technology that's going to help you find those specific trades. And then into the close, you can build momentum through the day and then carry that on to the next day. The third point about working on your psychology, I think trading psychology is this beautiful thing that everybody tends to get wrong, but it's a really fundamental part of what we do. We're just doing it in the wrong way so many different times. So traders on our desk do this daily report card. Lance has talked about it. There's a great video that Lance has done about the DRC, daily report card. Now, one thing that happens is you do your daily report card and then you share that with other traders on your team, in your pack. This daily report card sometimes can turn into this like Dear Diary type note, right? So you're saying, Dear daily report card, I promise to never make this trading mistake again. I need to work on my trading psychology because of this. Well, whenever you're writing that, it's not really an effective daily report card. It's not really reflective of the traders that are using that daily report card and making real improvements. It's not really reflective of the traders that we see growing on the desk and reaching new P&L highs month after month after month. those traders are intensely grounded, and their daily report cards are intensely grounded in trading edge. A simple practice is they're highlighting the easiest trade of the day that they saw, and then they actually mark up the chart. They share the specific way that they did or they would have executed on that clear trade. They talk about the sizing they would have had and why they would have had that sizing. They talk about the way they would have executed and why they would have executed that way, how they would make sure that they don't miss that really good trade again, the technology that they would use or used in order to find that trade. They are intensely specific with trading edge. They email it out to everybody in their trading pack, in their trading pod. They look for feedback. Maybe somebody's like, yeah, I saw that as well. That's a great observation. We really should have called that out. Or we did a great job of that. Here's how we could have done better. So they're getting feedback at scale. And then they take it a step further. And at the end of each week, they're summarizing that. They're reading through their daily report cards, and then they're sharing their thoughts again with those that they get to interact with. So these weekly summaries kind of turn into chapters in their trading journey. Those chapters sort of become the story of each individual trader's growth. As a result of this process, we're not really working on our trading psychology and hoping that that helps our trading. What we're really working on is our trading, and knowing our trading and the improvements there will actually help our trading psychology. It's kind of sad how easy it is to hear or read something, and then we attach our thinking to that. So maybe you saw something on Twitter, maybe you heard somebody say something, and sometimes it's even grounded in someone's individual experience, and they're trying to share that. Other times it's just something that maybe that person heard, and they're trying to add value to you in your trading, but they don't understand the context that you're dealing with entirely. You know, from our seat and my seat, I'm really lucky here. We get to learn at scale. You know, we have 50 traders working in packs every single day, looking at the trading opportunities existing in the market, looking to get better in their trading, looking to actually reach the objectives that most traders set out to obtain. We have 1,000 traders in our community, all working to obtain the objectives that every trader sets out to obtain. We have developers helping us build specific technology, you know, things like the Scalp Radar, other tools that we develop specifically for each individual trader on the desk. We have trading advisors working with us. We mentioned Lance earlier. He works with us. You know, we're really lucky, because we get to see what works, and not just with a sample size of 1 or 2 or 3, but a sample size of 50 and a sample size of 1,000. And then we get to share those insights with you, because we've actually seen what works for more people more often, and then we work to create solutions around that.